Akzo Nobel posted a good set of numbers in the first quarter of FY20, where the profits rose 31% on a year-on-year basis. Rajiv Rajgopal, the MD of the company, is joining us right now to take us through how the quarter gone by has been. Thanks very much for joining us, sir. Just quickly, if you could, we know the basic numbers, we know your revenue growth, we know your bottom line growth, but any highlights of the quarter that you would like to specifically point out?
Good afternoon to you and all the viewers. I think two things from my perspective. We've been on track in terms of the strategy that we've articulated even on your channel when I came in a few months ago. I think we're on track of the strategy. The three things that I would like to highlight: we've had reasonably good growth in our paints business coming on the back of the premium segment where we had eroded some share in the past. We are sort of seeing some traction there. We've also done very well in the marine and protective business. So these are the two highlights. I think we've had some challenges in our powder business, in our automotive and specialty coatings business. A bulk of these two businesses caters to the automotive segment, and as you know, currently that segment is a bit under pressure. In our industrial coating business, as I articulated the last time when I was on your channel, we've sort of decided to sort of exit a few parts of the business which were not adding to our contribution margin and hence our gross margins. So I think that's the way it is. That's from a very high level. I think the team has done well in terms of managing costs and making sure that we are able to deliver a huge operational efficiency on our processes. So as far as I'm concerned, I think India has started delivering its part of 15 by 20, which is the global strategy, and we are seeing some good traction on that so far.
Just let me ask you, obviously, while you know most paint companies that have exposure to the automotive segment have alluded towards the pain impacting them. In light of that, and considering that this issue with the industry is not going to go away anytime soon, the slowdown, is there a thought behind reshuffling or rebending the kind of exposure that you have, the decorative paint segment versus the industrial paint segment, and rebalancing the weightages you give to the two in terms of revenue contribution?
Yeah, so that's a continual process, and obviously we need the other businesses to try and sort of make up. The automotive and specialty coatings business has been a huge contributor even in the prior year. So I would think this is something that we anyway do. As far as the business itself is concerned, I think the team itself is geared in terms of looking at new channels, looking at ways to continuously tap the aftermarket. A brand called Wanda had sort of got launched in the end of last year. It's doing fairly well. So I think all the teams are sort of geared to try and make sure that they're able to try and flawlessly execute the strategies that have been articulated to try and deliver our 2019-2020 sort of plans.
Okay. Hi, Mr. Rajgopal. Good afternoon. While the paints industry, we've been looking at the numbers, they've managed to escape the slowdown that we've seen for other industries, and they've clearly outperformed. But in particular, your company, the top line growth was just about 1%, though we've seen a good margin expansion as well. So tell us, what was the reason for a flat top line growth, or rather an underperformance compared to your peers? And was the margin expansion as a function of change in accounting standard? Will it sustain going ahead?
Well, no, it's not the change in accounting standards. I think there are three contributors to it, to be honest. First, we've been the only player that took a price increase in the month of February, primarily because we still had a bit of a headwind on our input costs. As you know, we are in the paints part of the business, having a higher market share in premium. For us, it was important for us to try and make sure that we sort of pick up lost momentum in the prior year on our premium segment, and that's where the focus has been. So it's been also a contributor of better mix in the segments that we operate in. So that's been another reason why the gross margin has expanded. Surprising, a lot of work which is happening on margin management and mix have been some of the contributors to it.
Employee costs, I think, also is...
with regard to our competitors, the specific...
Yeah.
So I'll just come to that. I think with regard to our competitors, I think, if you look at post the GST, there's been an acceleration which is happening from the unorganized to organized. But I think the way to rightly look at it is, and if you look at 2-3 quarters, you should look at the gross margins, the contribution margins of all the players, and try and see how sustainable the results are. I think we've demonstrated for 2 quarters in a row now that our contribution margins are pretty good, and we are able to hold. Yes, there have been some restructuring, keeping in line our 15 by 20. We've sort of reshaped the business to try and make sure we are able to better harness opportunities in areas where we can sort of grow faster.
Just exercise, Mr. Rajgopal, that the company has undertaken by reducing cost, and also, as you highlighted, you've increased prices in the quarter gone by. Before I get to the volume growth, tell us what's the outlook for the paint industry now, considering, as I mentioned, this industry has escaped the slowdown. We have received good numbers. Do you see this trend continuing in the remainder of the year as well?
Well, I think the remainder of the year you would start seeing a bit of mixed responses, because there is a baseline that sort of comes in over the last year. So one will have to look at from an industry perspective. I don't think it would be fair for me to comment. I think from my perspective, I'm fairly optimistic that we should start seeing some good traction around the festive time, and post that other things being equal.
A word on your volume growth. I think it was in single digit in your decorative segment compared to the other peers who've also given guidance of higher volume growth in the decorative segment in the remainder of the year. Do you then foresee a volume growth remaining in single digits, and what's the reason for underperformance compared to peers here?
Well, again, one will have to be careful in terms of which segments we operate within the business. If you look at our growths are, pretty high single-digit, almost double-digit growths in the premium segment is what's also led to the margin expansion and the EBITDA expansions that you've seen. Yes, we've sort of been underrepresented in the mid-market segment and the economy segments, which is seeing a higher growth. Primarily because there's a shift from the kacha to pakka houses, and also because of the unorganized to organized. Our participation in that has not been as high. We've taken a note of it, and we are looking at opportunities which I think from a long term should make sense to us. So we are slowly studying it, evaluating it, and we'll come back where necessary with a response.
All right. So one last question, just since we're talking about it, so do you continue and do you expect the right sizing of your product portfolio towards premium and high product portfolio to be maintained going forward, and also a CAGR growth of earnings and profit of about, I think, 8.5% and 14.8% respectively? Will that continue for the rest, for the upcoming years?
So on the product portfolio, we've just sort of launched, in the premium side, in the paints part of the business, one of our flagship global brands into India called Dulux Ambience. We're launching it as Dulux Ambience Velvet Touch in India. We've just about sort of started the launch across the length and breadth of the country. Hopefully we'll be able to bring in some of our global learnings into some of the products as we start moving forward. So yes, we are sort of trying to see how best we can continue our growth momentum in the premium side. That said, I think we will have to both look at both, also the right level of participation in segments which are showing market growth, and make sure that we are able to address market share. In terms of outlook, we don't give guidance as we move forward. So that's something that we need to be sort of cognizant of. But I'm fairly, you've seen 2 quarters of our performance. I'm fairly confident that on the profitability side, we will continue our agenda as we move forward.
Guidance as such, but just the street is factoring in that growth rate for you. So is that something that you feel is okay to go by, or it's a little bit of a stretch for you? That's all that we want to know.
No, we don't give guidance on numbers, okay. But I think I think the fact that I've sort of given you sort of a heads up in terms of the fact that I'm fairly confident. We do not look at a quarter alone. I think for us it's very important in terms of how are we getting the trajectory right from a next 2-3 year horizon. I'm fairly confident. there are areas that we need to address and grow faster, and I think the teams are sort of working on them to try and make sure that we win the hearts and minds of the consumers and customers that we are engaged with.
Okay, Mr. Rajgopal, we'll leave it at that note. Appreciate you joining us today and taking us through the quarter gone by. That's the management of Akzo Nobel.